Government is shut down. I want to talk about what this means for the jobless claims report, the non-farm payrolls report, and the Federal Reserve meeting. We already know that stocks have fallen sharply, gold prices hit a record high, and the US dollar is lower across the board. These are all movements that I prepared all of you for in my videos and our Monday Market Buzz. But what comes next? The weekly jobless claims report, which comes out every Thursday, is not going to be released. The non-farm payrolls report will also be delayed. The Bureau of Labor Statistics released their contingency plans for the shutdown, and they made it clear in this contingency plan that the following agencies will completely cease operations, including the Bureau of Labor Statistics. However, the Federal Reserve meeting, which happens at the end of October, will be held. The Federal Reserve and the FOMC is an independent entity funded primarily by their own operations, like interest on securities, fees for services, and not through congressional appropriation. So they can still hold their meeting and still go to their jobs even if the U.S. government is shut down. Now, the big question is, without jobless claims reports, without non-farm payrolls report, without the possibility of the latest inflation report, will the Federal Reserve cut interest rates again in October? We all know that, according to dot plot, they had expected to cut. But, without this data, will they proceed? I think they will, because first off, ADP, which is a private sector payroll survey, turned negative. Not only that, but the previous number was also revised down. So there were job losses in the private sector, according to one of the largest payroll providers, 2 months in a row. That's really bad news. Also, a government shutdown, if it lasts for a month like it did back in 2018, that should shave anywhere between 0.3 to 0.5% off GDP growth. So also a negative for the economy. So while the Federal Reserve may be blind to data, there are many signs that will tell them that they need to proceed with a interest rate cut. Even if it ends up being an insurance cut, they could pause in December if the government reopens, but they need to do it. We also have the ISM reports that they can lean on. And if those numbers, they come in weak, it's pretty much a guarantee they're going to cut interest rates in October. But if they come in strong, maybe a tougher decision, but I think they're going to proceed anyway. I want to hear your thoughts in the comment below about what you think the Federal Reserve will do. And, fundamentals matter. The markets reward those who are prepared. So that's why it's important to watch my videos to learn and be prepared for the trades.